Good morning, friends. I am Devarsh Vakil from HDFC Securities. Today, on 20th August, early morning, we are recording this video. This is the seventh video in our fortnightly market outlook series. After being bullish for many months, now we are turning cautious on the market and we have important information to share in this video. But before we do that, Doyen of Dalal Street, Big Bull Rakesh Junjunwala passed away this week. We will pay homage to him by remembering him and also spend few minutes on lessons from his life. After that, I will start with how global markets have behaved over the last fortnight and month and share information about key international events ahead. Then I will invite Nagraj to share outlook from the technical perspective. After Nagraj, we will have Ajit tell us what derivative data is foretelling about the markets. In the end, we will discuss how to position ourselves over the next fortnight. The big bull, Mr. Rakesh Junjunwala, the doyen of Dalal Street, passed away this week. Indian stock market traders and investors will always remember him for his strongly held conviction that the best days of India are ahead. We are forever indebted to him for inspiring a generation of Indians to believe in Indian stock markets. We are truly sad and sorry for his untimely departure. Big Bull, rest in peace. So let's celebrate his life by learning key important lessons from him. For traders, a key learning is how to manage risk. You should only stake how much you can lose in any trade. For investors, his life is about learning to have strong conviction and patience. Patience to hold your winners for long period of time. He had his fair share of duds, but some of the stocks he selected went on to become huge multi-baggers. The method by which he selected his stocks were always look out for the external opportunity, quality of management, competitive ability, and scalability of the business. He lived life on his own terms, but some early bad habits could not spare such a brilliant mind and a disciplined trader. So why would it spare someone like you or me? So cultivate good habits for long peaceful life. Key developments over the last fortnight, as we have highlighted, the US GDP has declined for two consecutive quarters and it has stoked the worries about the inflation. UK inflation is also hitting new highs. Amongst the worries about the inflation, the retail sales, the backbone of US economy is still strong. US consumers are willing to redirect the benefit of lower food and gasoline costs towards the discretionary spending as opposed to reducing overall spending, and the corporate earnings are on track. 473, almost 95% of the S&P 500 companies have reported better earnings and revenue than the market expected. Now let's look at the movement of the international markets over the last fortnight and last 1 month. So markets have rebounded almost 6 to 7% over the last 1 month, and same is the case with the Indian market as well. And over the last fortnight, international and Indian markets have gone up by 2 to 3%. Among the sectors, power, capital goods, and realty have done well over the last fortnight, while metal, power, and capital goods have done well over the last 1 month. Now, if we look at the international markets like S&P 500, the biggest market in the world, it has come to closer to the downward sloping trend line resistance, and it has started correcting from here. From here onwards, it is important to look at the international data. So on 22nd of August, China is going to announce its 1 in 5 year interest rates. The important event is scheduled between 25th to 27th of August, the central bankers Jackson Hole Symposium. If central bankers in this symposium gives out the outlook that the inflation is under control and they are not going to hike the interest rates too soon, or in a larger magnitude, then markets will break out of this downward sloping trend line. In this symposium, if central bankers take a stand that the inflation is still not under the control and they are going to hike the interest rate further, the markets will continue to correct and go down. So keep an eye on the Jackson Hole Symposium in US between 25th or 27th of August. Let's invite Nagaraj to share his views based on technical charts.
Hi, good morning, friends. This is Nagaraj, a technical and derivative analyst at HDFC Securities. Today, we are going to discuss the technical market outlook, how the things behaved, panned out, and what are the technical outlook for the market where we had. Initially, we have seen the momentum, which was continued over the last 8 sessions, has faltered near the crucial overhead resistance of downtrend line. Friends, what we can see here, the downtrend line, which was a significant trend line, which was connected from the important lower tops, has been broken out slightly. There was a clear-cut show of lack of strength after the upside breakout in the last previous 2 sessions, and finally the bulls have given up on Friday and Nifty slipped below the trendline resistance after showing a false upside breakout. In terms of mid cap and small cap, both have moved up significantly over the period of time, but we can see from the chartically that mid cap has outperformed the small cap. Both run into a resistance at the higher level, even though after breaking above the trend line, the mid cap has failed in the last week and showed some reversal signal. But small cap was showing lack of strength as compared to its peer. Found a strong resistance at the higher levels as per the concept of change in polarity. So the conclusion is, friends, the bearish engulfing pattern, which was formed on the daily chart, and the bearish shooting starter pattern is in the process of weekly chart. We also observe a false upside breakout of the significant downtrend line at the hurdle at 17,900 levels, but the long-term charts monthly is still intact. These all indicate that short-term trend has reversed. We are likely to see downward correction from here. Currently, the 18,079.95, which has formed on Friday, seems to be a strong resistance, and one may expect weakness down to 17,330 level, which is 23.6% Fibonacci retracement from the bottom of June to the Friday's high. And once it support holds, we are likely to see possibility of upside bounce. In any case, if the 17,330, which is a 23.6% Fibonacci retracement, fails to hold, then the next support comes around 16,920, which is a 38.2 retracement. The bearish engulfing pattern, which was formed, is also formed in the Bank Nifty as per daily and weekly chart, and the next lower levels to be watched at 38,000. Weakness is expected in broad market indices and in the mid cap and small cap segments. And friends, the long positions needs to be protected with proper stop loss. That's all from the technical aspects.
Thank you, Nagaraj. Now let's invite Ajit. Over to you, Ajit.
Good morning, everyone. This is Ajit Nayak, technical and derivative analyst at HDFC Securities. Today, I am here to discuss about the derivative outlook on the market. So let us see what kind of position has been built up in the futures. So long unwinding was seen in the Nifty futures. On Friday, we can see Nifty fell sharply by 0.53%, and open interest also fell by 1.23%. What does it mean? It means long unwinding has been created in the Nifty futures. Similarly, we saw long position of long unwinding in Bank Nifty futures as well, where 0.3% fall in the open interest and Bank Nifty falling by 1.79%. If we see the option data, so what we can understand from the option data. So option data is very crucial to understand and have a mindset. So what we can do in the next week, in the forthcoming days. So call writing is seen at 17,900 to 18,000 level, and put has been written at 17,600 to 17,500. So when we look at such kind of data, we will get a broad range where we can build our positions. So to sum it up, long unwinding in the Nifty futures, call writing at 17,900 to 18,000 level, short build up by FIS in the index future, long unwinding by FIS in the stock futures, which alert us and which says that we have to be bearish with a stop loss of 18,000 level. Therefore, our advice is to be bearish and use any rally to create short position, but with a strict stop loss of 18,000. On the lower side, 17,600 to 17,500 will act as an immediate support. If by any chance market breaks that 17,500, the next immediate level we have seen in the open interest chart, that 17,300 is going to act as a support. And similarly, in case of bank nifty, our advice is to remain bearish and use any rally to create short position with a stop loss of 39,700. On the lower side, 38,300 and 38,000 will act as a strong support. If that breaches, because whenever the market is bearish, the supports has less validity and it tends to get negated, but the resistance has more validity. So once the support breaches, we can further see the unwinding of long position, which may drag bank nifty to 37,500. Thank you, everyone.
Thanks, Ajit. Now let's discuss how to position ourselves over the next fortnight. So the way forward, markets are near key resistances. Volatility will rise from here. Keep booking regular profits in trading. Lighten up on leverage and long positions in derivative markets. Long-term investors should generate some cash or hedge part of their portfolio. What central bankers tell us in Jackson Hole Symposium between August 25th to August 27 will determine the direction of the market. Thank you friends for watching this video. I hope you find this video series useful. If you have any comments or feedback, please do send it across to us. Thank you and have a great weekend ahead.